curious about what distinguishes successful investors from the rest? Is it sheer luck, impeccable timing, or a mix of factors? In the fluctuating realm of financial markets, discerning the qualities that mark the success of seasoned investors can be the key to financial growth. These savvy individuals navigate the intricacies of the investment world with a mix of acumen, well-devised strategies, and an exceptional sense for anticipating market shifts. But what exactly sets their approach apart? In today's exploration, we're peeling back the layers to reveal the core elements of their investment prowess. Let's embark on this insightful journey to discover the strategies and mindsets that elevate these investors. Mindset, the foundation of success. Investing isn't just about numbers and trends. It's also a mindset game. Successful investors share a unique mindset that combines optimism with realism. They're not swayed by emotions, but driven by logic and research. This mindset is not born overnight, but cultivated through experience and continuous learning. It involves understanding one's own biases and navigating through market noise with a clear vision. What sets them apart is their ability to maintain a balanced perspective, celebrating wins without becoming overconfident and accepting losses without falling into despair. This mental resilience enables them to make decisions based on long-term goals rather than short-term fluctuations. They understand that the market is unpredictable, yet they remain focused on their strategies, adapting as necessary without losing sight of their ultimate objectives. This disciplined approach, coupled with a healthy dose of skepticism, helps them avoid common pitfalls like herd mentality or market panic. Ultimately, the successful investor's mindset is a blend of curiosity, patience, and humility, always ready to learn and grow from both successes and failures. Research and knowledge. Knowledge is power, especially in the world of investing. Successful investors are always learning, constantly updating their knowledge about markets, companies, and global trends. This pursuit of knowledge is relentless and multifaceted. They don't just follow the latest news, they dive deeper, analyzing financial reports, market conditions, and economic indicators. They also understand the importance of historical context, learning from past market cycles to better navigate the future. This in-depth research enables them to spot opportunities that others might miss and avoid pitfalls that trap the uninformed. It's not just about gathering information, but about synthesizing it into actionable insights. Successful investors also seek diverse perspectives, challenging their own assumptions and considering alternative viewpoints. This comprehensive approach to knowledge isn't confined to their specific interests. They also stay informed about global economic trends, technological advancements, and socio-political changes. Their well-rounded understanding of the world helps them anticipate and react to market shifts with a nuanced perspective. This constant quest for knowledge, combined with the ability to critically analyze information, is a cornerstone of their investment strategy, empowering them to make informed, strategic decisions. Risk management. Every investment carries risk, but successful investors excel in the art of risk management. They don't just acknowledge risks, they proactively strategize to mitigate them. This process begins with a thorough risk assessment, identifying potential downsides in every investment. Successful investors use a variety of tools and techniques, such as hedging, stop-loss orders, and diversification to manage these risks. They also maintain a keen awareness of market volatility and economic indicators, adjusting their portfolios accordingly to shield against unforeseen market shifts. Crucially, risk management for these investors isn't a one-time task, but a continuous process. They monitor their investments regularly, ready to make adjustments as new information arises. This disciplined approach ensures that they're not caught off guard by market fluctuations. By balancing risk and reward, they not only protect their investments, but also position themselves to capitalize on opportunities that high-risk situations may present. In essence, successful investors treat risk management as an integral part of their investment strategy, a skill that enables them to navigate through market uncertainties with confidence and poise. Diversification. Not all eggs in one basket. Diversification is a cornerstone strategy for successful investors. It's the art of spreading investments across various asset classes, sectors, and geographies to minimize risks. But effective diversification is more than just a random assortment of investments. Successful investors strategically select a mix that balances potential risks and rewards. They understand that different asset types react differently to market conditions, and by diversifying, they can smooth out the volatility of their portfolio. This approach requires a deep understanding of how different investments correlate with each other and the overall market. Successful investors also regularly review and adjust their portfolios to maintain optimal diversification, especially as market conditions change. They recognize that diversification is not a set-it-and-forget-it strategy, but a dynamic process that plays a crucial role in long-term investment success. By not putting all their eggs in one basket, they ensure that a setback in one area doesn't spell disaster for their entire portfolio, thereby preserving and growing their capital over time. Patience and long-term vision. Investing is a journey that demands patience and a long-term vision, something that successful investors embody. They resist the allure of short-term gains in favor of long-term growth. This patience stems from a deep understanding of the market's cyclical nature and the power of compounding. Successful investors know that time in the market often trumps timing the market. They are not swayed by short-term market fluctuations or media hype. Instead, they focus on their long-term objectives, aligning their investment choices with their future goals, whether it's retirement, wealth preservation, or legacy building. This long-term perspective enables them to make more thoughtful and calculated decisions, rather than reacting impulsively to market ups and downs. They understand that while the market can be unpredictable in the short term, it has historically trended upwards over the long term. Their strategy is rooted in persistence and resilience, allowing them to weather short-term volatility and capitalize on the growth potential of their investments over time. In essence, their patience and long-term vision are key attributes that guide their investment journey, setting them apart from the average investor. Adapting to market changes. The market is a dynamic entity, constantly evolving with economic shifts, geopolitical events, and technological advancements. Successful investors are those who adapt fluidly to these changes. This adaptation isn't reactionary but strategic. They stay informed about global events, economic indicators, and industry trends, using this information to fine-tune their strategies. This might mean reallocating assets, exploring new sectors, or adjusting their risk tolerance. But it's not just about reacting to changes, it's about anticipating them. These investors have their fingers on the pulse of the market, often identifying trends before they become mainstream. They understand that rigidity can be a downfall in investing. By remaining flexible and open-minded, they can pivot their strategies in response to market shifts, capitalizing on new opportunities while mitigating potential risks. This proactive approach to market changes is a hallmark of their investment philosophy, allowing them to stay one step ahead in a constantly changing financial landscape. Emotional discipline. Emotional discipline is a critical component in the toolbox of successful investors. The investment world is often a roller coaster of highs and lows, and it's easy to get swept up in the emotions of the moment. However, successful investors maintain a calm and composed demeanor. They don't allow fear during downturns or greed in upswings to dictate their decisions. This emotional steadiness comes from a deep understanding of their investment strategy and a strong belief in their long-term plan. They set clear goals and establish guidelines for their investments, which helps them stay the course, even during market volatility. This discipline is not about suppressing emotions, but about recognizing and managing them effectively. By maintaining this emotional equilibrium, they make decisions based on rational analysis rather than impulsive reactions. This emotional fortitude enables them to capitalize on opportunities when others are driven by panic or euphoria, often leading to more measured and successful investment outcomes. Learning from mistakes. Even the most successful investors are not immune to mistakes, but what distinguishes them is their approach to these setbacks. They view mistakes not as failures, but as valuable learning opportunities. This learning mindset involves a thorough analysis of what went wrong, whether it was a misjudgment of market conditions, an oversight in risk assessment, or a miscalculation of a company's potential. They take these lessons seriously, incorporating them into their future strategies to avoid repeating the same errors. This reflective practice is rooted in humility and the understanding that investing is a continuous journey of learning and growth. They also share their experiences, contributing to the collective wisdom of the investment community. This openness to learning from mistakes ensures that each misstep becomes a stepping stone to greater success, refining their investment strategies and enhancing their decision-making skills. Ultimately, their ability to embrace and learn from mistakes is a key factor in their long-term success and resilience as investors. As we journey through the traits that separate successful investors from the rest, it's clear that investing is more than just numbers. It's an art and a science, blending knowledge, strategy, and emotional intelligence. From understanding risk management to the value of learning from mistakes, we've uncovered that successful investing requires a multifaceted approach. Thank you for joining us on this insightful exploration with Thrive Tactics. If you found value in today's episode and wish to continue growing your investment acumen, remember to hit that subscribe button. Stay tuned for more empowering content that helps you navigate the world of finance with confidence and strategy. Until next time, keep thriving and keep investing wisely.